TAO just kissed its make-or-break support. Again, Grayscale has carved out a brand new AI sector, and guess which ticker sits on top? Meanwhile, social media volume lights up like July fireworks, yet the sentiment gauge screams fear at 35. Add in one of the highest staking ratios in the entire market, and we've got the kindling for a textbook contrarian play. In the next 8 minutes, I'm unpacking 10 must-see charts and tweets, dropping 4 precise take-profit zones, a non-negotiable stop, and the single metric nobody's watching on Bittensor's own subnet dashboard. Stick around, because if this trend line snaps upward, early movers could be looking at triple-digit gains before most traders even finish doom-scrolling. Let's dive in. TAO has tapped the same $300 shelf 7 times in 4 months. Every prior bounce produced at least a 50% move. Will history rhyme? The chart tells me buyers still defend the level, though each stab gets shallower. Classic compression before expansion. Lucky's wedge is no meme. The downward channel has already broken once. Price is now retesting the breakout line as support. A structure technicians call throwback confirmation. If bulls reclaim $357, that gray line in the green box, inertia flips from gravity to jet fuel. Here's where the story gets spicy. Volume expanding while sentiment tanks. That's capitulation-style fuel. Retail is panicking. Smart money quietly accumulates. Across the entire AI narrative, TAO dwarfs rivals Injective and Fetch in engaged posts. Outside AI, TAO's deep-in credentials keep it relevant. Cross-narrative strength is rare. It means multiple investor tribes watch the same order book. Almost 3/4 of circulating supply is locked, illiquid. Every dip you see is fought over slices of the remaining 29%. Root Subnet commands the biggest market cap, yet Alpha owns the lion's share of Subnet's value. Translation: builders are migrating compute power to experimental nets where rewards skew higher. That's growth DNA, not exhaustion. $2 billion depth on Root alone. Institutions can enter without slippage when sentiment flips. File that under future catalyst. When asset managers like Grayscale invent a sector, they're signaling intent to package, index, and market that narrative. TAO near and grass. 3 tickers, 1 index. Guess who has the microcap upside? Not the $6 billion layer 1. It's the $2 billion decentralized intelligence mesh. Pointman's count argues wave 2 just bottomed. The textbook launch pad for the biggest impulsive leg. Whether you love or hate Elliott, it dovetails with our fib clusters at $520, $750, and $1,100. This chart is my battle plan. VRVP shows the largest historical volume node at $360. The dashed white support, Trendline from December peaks, intersects the 382 Fibonacci extension at $390. Our first bull-bear knife fight. Heikin-Ashi RSI indicator has just printed its 4th consecutive red candle. It's not good, but now is the time to react. These green circles are not hopium. They're Fibonacci confluences with prior volume gaps, areas where price historically teleports. If price closes a weekly candle south of $270, the trade thesis dies. Simple. If you have a low average price, then it's different. You have to make the decision to hold or take profits. I would wait for the price to return around $220 before considering a reentry. Above that, my first take profit target is at $520. Half position off, pay yourself, and trailing stop to entry. TP2 at $750. Another 20% trim of your total initial position. TP3 around $1,000. Psychology flips from disbelief to FOMO. TP4 at $1,500, another psychological number, and close to the 2618 fib extension, historically where euphoria peaks. Bookmark those levels, screenshot if you must. Precision is power. Look, if you zoom out, this entire setup screams asymmetric upside. Retail exhaustion at fear levels is exactly where smart money starts writing its victory tweets in advance. I'm convinced the next decisive candle will leave most spectators chasing, not riding. The staking chokehold? That's Tinder. The new Grayscale label? That's the spark. And these whales edging in while timelines cry dead project? That's the oxygen. Put together, it feels less like speculation and more like inevitability. Could I be wrong? Absolutely. But dodging a confluence this loud just because the herd is panicking feels like the costliest comfort. I'd rather be early and disciplined than late and jealous. We've just seen how staking ratios, locked supply, and smart contract incentives can tip the scales on any chart. Those mechanics are not trading tricks. They're pure DeFi engineering. If you want the step-by-step playbook for harvesting that same yield logic across liquid staking tokens, lending loops, real yield vaults, and even upcoming airdrops, it's all inside my ebook DeFi Financial Freedom, the ultimate beginner's guide. For only $5, less than a coffee in your favorite spot, you will discover step-by-step strategies to grow your wealth with staking, yield farming, and airdrops, while exploring the most trusted platforms like Uniswap, Aave Airdrome, and more. Whether you're a beginner or an experienced crypto investor, this ebook simplifies complex concepts and provides actionable insights to help you achieve true financial freedom. The link's pinned in the top comment. Grab it, plug the frameworks into your favorite protocols, and let's turn passive yield into lasting freedom. All right, if Tao's Trendline battle helped clarify your next move, punch that like button. It tells the algorithm you value real analysis over recycled hype. Drop a comment. Does $300 hold, or are we heading to the demand box at $270 first? I read every take. Hit subscribe and ring the bell so you don't miss our daily deep dives and market updates. You'll find our last episode on the end screen now. Watch this one. Remember, none of my videos are financial advice. Just one analyst sharing his journey. Keep learning, stay grateful, and I'll see you tomorrow in the next one.